Hello everyone, good morning, good afternoon, and a warm welcome to today's webinar. I'm Kiyur Sevak, VP Marketing at Insurance Directions. I'm joined today by Parul Mehta, Chief Research Officer at Insurance Directions. Parul leads our Insurance Directions research agenda and brings a wealth of expertise and experience in identifying the trends and transformation that are shaping the future of insurance. For those joining us for the first time, Insurance Directions is a leading industry analyst group dedicated to supporting senior executives across the insurance sector. We provide independent insight through our publications, strategy sessions, workshops, and training, helping organizations navigate the rapid changes in the digital landscape from AI and analytics to IoT, customer engagement, and new business model. Today, we are going to explore Insurance Industry 2026 and beyond. To take us through this exciting topic, I'll now hand it over to Parul, who will guide us through her presentation. Over to you, Parul.
Thank you for that kind introduction, Kayur, and welcome everyone on this webinar on insurance industry in 2026 and beyond. Insurance companies face unprecedented transformations in 2026. It's because of the factors like climate volatility, AI proliferation, workforce shortages, changing customer expectations. All of these are reshaping competitive dynamics. In this webinar, I would like to take you through 9 strategic points that would define the insurance industry in 2026 and beyond. We expect 3 fundamental shifts to continue to transform the insurance landscape. Number 1, AI and other technological accelerations are compressing innovation cycles. Number 2, the customer expectations are even more elevated because of their retail and fintech experiences. And lastly, number 3, the risk landscape is changing with climate change, geopolitical conflicts, regulatory tightening, and newer emerging risks. If you look at the current situation, the insurance carriers are embracing transformations. The cloud based, API enabled infrastructures and AI led automations are rapidly becoming the norm. Telematics led data captures and AI driven data analytics are enabling the insurance companies to price risk dynamically. We believe the combination of all the above factors will push the insurance companies to work towards achieving digital maturity, and the points ahead in this webinar will help them to act informatively and decisively. So let's see what they are. In 2026 and years ahead, we believe hyperpersonalization will become competitive baseline. The insurance customer lifetime value is increasingly skewed. Not all customers contribute equally to an insurance profitability. Some segments are more profitable, some are less, and some may even be negative contributors. The insurance companies need to increasingly leverage data and analytics to segment their customer base and understand their behavior. Tailoring products, services, and experiences to the needs of high value customers would help build stronger relationships and reduce churn. We believe incorporating dynamic pricing and coverage based on the real time behavioral data would help the insurance companies to retain customers, improve NPS scores, and optimize profitability. So, what to do to achieve your hyperpersonalization goals? Invest in AI driven engagement platforms, which can analyze real time customer behavior. Also, develop dynamic pricing models, which can adjust continuously based on customers' behavioral data. Also, create omni channel communication strategies, which can maintain consistency across all the touch points. One important thing is to establish feedback loops where customer interactions refine personalization algorithms consistently and continuously. And above all, incorporate strong data governance frameworks for the use of personal and behavioral data. Number two on the list is parametric insurance. We expect parametric insurance to grow rapidly in the coming years. If we look at the market, more than half of the market is representing natural catastrophes. The market is driven by two factors: increasing natural disaster frequencies, and real time monitoring technology is maturing very well. AI, machine learning, and improved global data sets are enhancing accuracy. This is allowing for more precise triggers and faster payouts. We also see blockchain verified settlements are reducing cycles from weeks to days. We we expect the parametric insurance to expand beyond the natural catastrophe area. We expect this coverage expanding to agriculture, cyber, supply chain, and pandemic coverages. To take advantage of this growing market, some of the action points could be develop parametric products such as AI driven agricultural policies for loss of crops because of drought, flood, etc., in geographies where it's needed. Another points could be on the technologies, partner with satellite and IoT data providers, integrate blockchain and smart contracts, etc. In the coming years, we are going to see lot of embedded insurance. The market of embedded insurance is expected to grow at a CAGR of around 30% for next 5 years. It is driven by its seamless integration into the digital customer journeys, e-commerce, and customers' desire for simplified protection in real time. We believe around 30% of the insurance transactions in 2026 will come embedded in automotive purchases, e commerce, fintech platforms, and real estate transactions. For customers, it eliminates friction from the buying process. And from the insurance company's point of view, automated underwriting can enable real time quotes, and integrating them at the purchase moments would likely to get more positive results. This will decline customer acquisition costs as well. We believe some of the key points that would help an insurance company are factors like building API infrastructure that supports real time quotes and policy issuance, focus on maintaining compliance, pricing accuracy, consistency in user experience, and data interoperability when plugged into external partner ecosystem. Also develop modular micro insurance products and invest in AI product matching engines for insights. And the most important would be establishing partnerships with high traffic digital platforms. Skill shortages is a real problem. According to the US Bureau of Labor Statistics, nearly 400,000 insurance employees were expected either to retire or leave by 2026. The insurance industry is facing a shortage of skilled insurance professionals such as underwriters, claims handlers, risk profilers, etc. It is typically driven by an aging workforce, higher retirement rates, and struggle to attract young talents. Simultaneously, the skills required to navigate within the industry have dramatically changed. It has shifted more towards technology roles such as data analytics, AI, cybersecurity, etc. This is creating dual crisis, departing employees plus skills mismatch. If the skills gap in digital competencies is not tackled, it can lead to knowledge loss in terms of experienced underwriters. It can reduce capacity to process submissions and service degradation. To tackle these skills shortages, few things can be done. Establish mentorship programs pairing veterans with junior staff. You can also create aggressive upscaling initiatives towards digital competencies. Another good way is to develop university partnerships for talent pipelines. You can also implement remote work policies to access global labor markets. And lastly, it might be a good idea to consider strategic acquisition of insurtech firms for their technical talents. In the coming year, AI governance will become a key differentiator. We expect intense regulatory oversight in the years ahead as AI adoption accelerates. Insurance companies establishing robust AI governance frameworks will gain regulatory approval for innovations faster than their competitors, while those ignoring governance may face delays and restrictions. The regulatory bodies are increasingly focused on algorithmic bias and transparency. As AI is becoming more pervasive, ensuring its ethical use and mitigate associated risks such as bias, data privacy breaches, etc., is crucial. We advise insurance companies to establish policies, procedures, and guidelines to manage the risks and ensure the responsible use of AI. This will enhance overall trustworthiness and accountability of AI systems within the organization. Some of the points that would help with AI governance are shown on the slide. Focus on fairness, transparency, accountability, data quality, and compliance with evolving regulations like EU's AI Act or UK's Data Use and Access. Uh, this will build trust and mitigate risks like bias and discrimination. Integrating AI into existing risk and compliance frameworks would also help. And lastly, establish AI governance team, create cross-functional ethics committees, implement explainable AI technologies, develop comprehensive bias testing protocols, maintain audit trails, etc. We expect to see more and more complex cyber threat landscape in the years ahead. Increased investment in AI are likely to work in both directions. On one hand, it will power the attackers with AI powered deepfakes and misinformation. And on the other hand, the cybersecurity experts will be able to use AI and AI agents to identify vulnerabilities and risks and keep them at bay. We expect to see more sophisticated attacks because of the security gaps created by AI integrations. This will also create new liability categories such as autonomous system failures, AI decision errors, etc. Alongside, we also expect the businesses to increase their investment in cybersecurity measures. So, combination of both these trends will affect the pricing of cyber insurance premiums as well. To tackle the complexity of cyber landscape, we advise to focus on proactive risk management. Leverage advanced analytics for more precise risk assessment. Develop AI specific underwriting protocols such as specialized underwriting for AI specific risks and establish cybersecurity partnerships. The global usage based insurance market is projected to show strong growth in 2026. We expect to see a large number of automotive policies to be usage based because of advances in telematics technologies and customers' demands for personalized pricing. More and more new vehicles have embedded advanced telematic systems directly into the vehicles, and it's coming with mobile integration. On the regulatory front, many countries like Germany, India, US are pushing telematics driven road safety programs. It requires vehicle to be equipped with data recording systems. And this is facilitating better environment for usage based premium models. So overall hardware costs are eliminated. AI algorithms can predict accident likelihood with more than 95% accuracy. And according to insurance directions, usage based insurance policies are more effective in reducing claim costs by 20 to 30%. And customers can enjoy reduction in premiums by 15 to 30%. For wide adoption of usage based insurance, the carriers should focus on clear communications, attractive incentives for the policyholders, strong data privacy, and ease of use. Have app based programs for customers, develop AI powered scoring algorithms, create gamification elements. Another good action point can be offering flexible mileage and behavior pricing. And lastly, have partnerships in place with automotive manufacturers for embedded telematics. In the coming year, straight through claims processing would be possible across a wider range of product lines in the personal and SME space. We believe in case of low complexity claims, the insurance companies will be able to achieve end-to-end resolution in matter of minutes. It would require minimal human intervention, and the operation costs for such claims are likely to be reduced by more than 50%. Straight through claims will also help improving customer satisfaction because of its nature, faster and frictionless. To deliver straight through claims processing at a scale, focus on automating claims workflows. Create an environment for it. AI powered FNOL, computer vision for damage assessment, real time fraud detection, data validation, AI based triaging, uh, all will help with it. In the coming years, we expect to see insurance companies increasingly operating as ecosystem orchestrators. Their success would depend on seamless integration with technology partners, data providers, distributor channels, and service networks. We expect to see wider integration with various data sources for holistic view of risks and customers. We also believe we will see deeper collaborations with non-insurance entities on the distribution front. Overall, the competitive advantage will hinge on the ability to intelligently orchestrate a network of technologies, data, and people into a unified, intelligent operating model. To be successful ecosystem orchestrator, some of the following things would help. Adopt API first development approach, invest in integration platforms, create strategic alliances and build partner marketplaces, develop partner success programs, and establish revenue sharing models with them. So, these are the points that we believe would define the insurance industry in the coming years. This slide rounds up insurance directions, strategic recommendations for 2026 and the years ahead. We believe the future will belong to the insurance companies that are embracing change, investing in emerging capabilities, and building customer centric ecosystems to deliver superior value. Thank you for your time today, and we will see you in the next webinar. Thank you.
Thank you, Parul, for sharing those valuable insights, and thank you to everyone who joined us today. At Insurance Directions, our goal is to provide clarity and actionable guidance to help insurance leaders navigate the fast evolving digital landscape. We hope today's session gave you new perspective and ideas you can take back to your organizations. If you'd like to explore more, I encourage you to visit our portal and subscribe to our publications and advisory services, where we dive deeper into the trends shaping the insurance sector. On behalf of all of us at Insurance Directions, thank you once again for joining us and your time and participation. We look forward to welcoming you at our future sessions. Have a wonderful day ahead.